Right now we're starting panel 2. It's a very, very interesting one. It's called Profit First, Impact at Scale. Identifying meaningful impact investment opportunities in Southeast Asia. I'm moderating this panel. My name is Martin. I'm co-founder and partner of Genesis Alternative Ventures. Again, before that, some housekeeping rules. Poll on Zoom and Q&A on Pigeonhole. Actually, that reminds me I need to pull out my phone, look at the Pigeonhole in a while. Let me start by introducing our panelists. First up, Melissa Kang. Melissa, very, very pleased to have you here. So Melissa is the founder and managing partner of GI Capital. It's focused on private equity and impact investing. Prior to founding GI Capital, Melissa has had a long track record of impact and ESG investing, which I'm sure I'll definitely be sending a lot of questions your way. And seated here as well is Ben, my fellow partner and co-founder at Genesis. He is a strong believer in giving back to society, and he himself really is the key driver in Genesis' impact investing journey. On screen with us is Dave Richards. Dave, good evening. Thank you for your time. Dave is the co-founder and managing partner of Capria Ventures, also an LP in Genesis. So one of Capria's key investment criteria is that companies must have commitment to deliver superior returns along with scale impact and global class ESG. So he definitely knows a thing or two about impact investing. So Dave, a lot of questions will come your way as well. And last but not least, Dr. Felix Schneider. He is the investment lead for DEG's FinTech investments in global markets. DEG is a development finance institution and subsidiary of KfW Group. It promotes private sector companies to contribute to sustainable economic growth and improve living conditions in these countries. Without further ado, we'll get straight into the panel session. So, impact investing, ESG, it can be quite abstract. You know, there's a lot of data going on. There's a lot of acronyms, GIN, UN SDGs, what have you, and a lot of there's been a lot of focus of late as well. So I'm not going to talk about the technicalities of it all, but I'm just going to get everyone to warm up and go straight into sharing how they got started in impact investing. So for the audience who have joined us earlier in the keynote session, Datuk Sri shared his own impact journey. I think it's a great way to start the panel, and I would like every panelist to share how they got started on their impact investing journey. Melissa.
Okay. Thank you very much, Martin, and thanks Genesis Venture for inviting me here. Very happy to be here. Yeah, this is if you ask me about my impact journey, you need to go back like 50 years, very long time. So we grew up in Singapore. I live in Kampong. There was no, there's no television, but we have access to tap water. We have a place where we throw our trash. You know, that's how we take it for granted. But in the mid-90s, I moved to Malaysia, to Kuala Lumpur, to work for a few years in investment, in research. I live in a condominium in the center of Kuala Lumpur. That was the first time I experienced something about impact, actually negative impact, because the reservoir in Kuala Lumpur in the mid-90s, they were so polluted that it was not treatable. I live in a condo that has no water. This is the first time where I have to carry buckets of water every day, just like in India or very remote villages. So after 1 year of that, I continue, and when the water problem was over, that was the beginning of the haze, where when the apartment I live, I could not see anywhere. It was the beginning of the burning of the palm oil waste. So I quickly ran back to Singapore after that 2 years. And then life continues. Every season we complain about haze. Until in around 2007, I moved to Hong Kong. Wow, haze is a daily event in Hong Kong, right? And not only that, I live in a very, in a very nice place. My office is in Central, Jardine House is nice. But I have experienced, maybe an appetizer for $100 or dessert for $100 in Hong Kong. But in the morning, I would see many people squatting on the floor with a toothbrush, brushing the shopping mall landmark floor. I was like, there's something wrong socially here, right? How could this even be possible? And then next, the very major thing that really happened, a couple of things. One was the tsunami in Japan. So when we live in Hong Kong, we like to eat Japanese food. The quality is good. We fly to Tokyo frequently or long weekends. Because of the tsunami in Japan, many Japanese restaurants in Hong Kong closed down because everyone was so afraid of radiation. And that is like, although it was obvious, but it was never occurred to me the close link between a major environmental crisis and immediately day-to-day life. And Sogo was a shopping supermarket that many people like to go there and buy ingredients from Japan. And suddenly nobody wants to go there to buy ingredients for Japan. Then Sogo put up a sign and said, don't worry, our food are not from Japan, they are from China. We just put a Japanese label over it, right? This really raised the question about food traceability. And at the same time, where we were experiencing, this is around 2011, right? There was the very, very major issue of melamine milk for children, for pet food that causing many kids very ill. Steroid peak, we peak like very muscular. These issues, and then I have a 16-year-old daughter that time was trying to go to college, and she wrote many, essays that why she wanted to be, get into architecture school. Her essays basically said, she observed the irresponsible behavior, investment, development of all the adults in society, and that is what she wants to change when she become a grown-up professional. That is the time when I realized, my God, I can no longer wait for the government to do something about it, or some people to protest on the street, or NGO. Maybe I start thinking, right, who can make these changes? Shareholders of company. You can influence management team. Management team produce goods that are safe and meaningful. We take care of the environment. So that is the time that I decided to shift my career, and I had a great opportunity of joining IFC. I became the head for IFC's East Asia funds business and managed $1 billion for them, where I learned how to invest in ESG. Then it's been now almost 10 years, and that journey continues. So sorry, it's a very long answer to your question.
Wonderful sharing. From DFI to DFI. Dr. Felix, over to you, please.
Thank you so much. Thanks. And hi to everyone from Cologne here. It's a great pleasure to be with you, although virtually. I mean, someday soon I would like to visit you all in Singapore and take a closer look also to this great green map behind you. This looks really amazing. Yeah, and I think a green map, that's also quite a good starting point to your question on my journey to impact investing. So I started my career at around 2009 in commercial banking and financial services, and worked there roughly for a decade in a purely commercial developed market setting over here in German-speaking Europe. There I worked in various roles at KPMG's financial services practice and had a great variety of financial institutions as clients, and also started working with FinTechs over here in the growing scene in 2012, 2013. And the growing FinTech scene over here in Germany was quite fascinating to me, but over time I started to realize that the real opportunity of FinTech was in emerging and developing markets, where it can open up the opportunity to really leapfrog the status of financial services and contribute in an unprecedented way to financial inclusion and outreach of financial services by using modern and mobile technologies. And because access and availabilities of banking products such as payments, credit, and insurances is a very crucial cornerstone for basically all further development of a country's economy. So at the same time, I had this realization and began to understand this huge potential, which was about 2017. DG, which is one of the world's largest development finance institutions and impact investor, was looking for someone to start out and develop a FinTech investment strategy and build up a portfolio of FinTech investments in global emerging and developing markets. And yeah, to me, this was an irresistible opportunity at the time and challenge, which I gladly took on now more 3 years ago. And this was my personal start into an incredible journey of impact investing, where since then I've had the privilege every day to meet and work with great entrepreneurs and teams that are extremely motivated and skilled in building out ventures that make a real difference and impact in their ecosystem and countries. And yeah, to date, we are proud that we have made a good number of investments in various FinTech companies across Asia, Africa, and Latin America. And I think it's getting more and more exciting every day as more and more opportunities are opening up and the ecosystem is growing and growing. And yeah, we're very happy to be a part of that and contributing with capital and also expertise.
Thank you very much, Dr. Felix, for sharing. So we'll fly over to Seattle now and get Dave to say something.
Hi, everyone. Good to be with you all. I started my impact journey with microfinance. About 15 years ago, I read a book by Muhammad Yunus that told his story of how he set up, which became the largest bank eventually in Bangladesh, called Grameen Bank. And I was hooked with the concept of a model for micro lending to low-income women, which had a far higher repayment rate than what middle-class people were paying back on their personal loans. It just kind of defied logic, but it was very powerful. It created dignity for people to have more self-reliance than to rely on handouts and ability to provide for their family in different ways. A very powerful model. I was involved with helping set up a group called Unitas, which helped to replicate and support entrepreneurs replicating the microfinance success in Bangladesh in places such as India, Southeast Asia, Africa, and Latin America. And we started to be one of the first private venture investors that was backing these new generation of entrepreneurs who were really building the next generation of microfinance businesses. Many of these now are very scaled. Some of them are chartered banks in places like India and other places. And that's my journey. And then really that was what inspired me. My background prior to getting involved in investing was as an entrepreneur in tech companies, scaling them up globally. But I saw a really opportunity to support a new generation of entrepreneurs that were scaling up not just financial inclusion products, but also areas of healthcare, education, agriculture, logistics, basically all the things that were giving opportunity to the masses to be part of the inclusive development across my focus, which has been the Global South.
Thank you, Dave. We'll come back to Grameen in a while, but right now back to SMU and over to Ben.
Thank you, Martin. My impact journey began with your impact journey and Genesis' impact journey in 2018. So we're very, very new to the impact space. And if I remember, it happened in the boardroom one day when we were just beginning to get the fund up and running. And Jeremy, Martin, and myself had just come together as a team. And we said, look, please God, we'll build a successful fund and a successful business, but there's got to be something else to it. How can we give back to society? And we thought and we spoke, and it took us 45 minutes to think about all the wonderful ways in which we could potentially do some impactful investing. And then we left the meeting, and for the next 3 to 4 months, didn't think about it at all, because it was crazy to get a fund up and running, and you guys know how it is. As it would happen, the gentleman sitting on your screen in Seattle, Dave Richards, was in Singapore for a meeting. We had a meeting, and we understood that Capria at that time was looking to invest in Southeast Asia funds, and they brought along with them a very strong impact in ESG knowledge and experience. So together with Capria, Jeremy, Martin, and I set out to really build what we hope will be a very key part of Genesis moving forward. and that is to selectively invest in Southeast Asia high-growth tech companies that have a strong, impactful mission to them. I think at this point, there are about 6 companies in the portfolio, which almost make up half the portfolio today, that have got strong, impactful missions. And we're very, very proud to say that on the return side, many of these companies as well, stacking up against the non-impactful companies. So that was our beginning days in impact, and very happy to be on this panel and learn from the experts.
Don't go yet, Ben. Just before you go. So how would you describe impact and ESG to a 10-year-old?
A 10-year-old, wow. Okay, so how we put it internally and how we talk about it with companies, and Dave, we've spoken about this at length in our bi-weekly sessions. ESG is don't do all this bad stuff, and impact is do the good stuff. So it's really 2 sides of the same coin. We consider ESG to be reputation management and the stuff that companies really shouldn't be doing, and some of the good stuff that they should be doing around governance, for example, and environmental and social initiatives. Impact is the positive stuff that we want to see scale together with the model of these businesses. So as these businesses scale and grow, so too should the impact. It should be connected with these businesses as they grow in size, so that the impact as well scales into communities at large.
Melissa, what's your version?
Okay, I have twins, they're 9-year-olds, so I talk to them a lot, but usually it's the other way. They tell me what is impact, what is ESG. So over the years, I have come to this kind of realization of my personal conclusion is that I find impact is about wisdom, and ESG is about value. So what is wisdom, right? What is impact? Because impact has both sides. It's good, negative, and positive impact. So when we are impact investor, we want to create net positive impact. Because no matter what you do, there is going to be an impact. So it's like telling my kid, if you play with fire, there's a risk you burn yourself or you burn down the house, right? That is a negative impact. But let's say if you water the plant properly, then you have flowers, something like that. It's impact, it cause and effect. It's quite easy to understand. But as an impact investor, we need to push and scale positive impact. That is our mission. On the ESG side, why do I say value? Because I look back at my ancestor, like my grandfather. My grandfather is one of the most sustainable person I ever met in my life. He does not like to use electricity. He only used candle at home. And not only that, he recycled his candle. He collect the candle wax and he make new candle. That's how sustainable he has been. He never turned on the water or the tap to get water because the pipes in the old days were not very good. So there's a lot of leak. He just collect all the leaking water from, and then he save money. He doesn't have to pay for the water, right? So, but I find that in a different industry, you look at, there's a fishery industry. If you read books of in the old days where fishermen fish, they would try not to fish, let's say, female fish, because they throw them back. And then we have gone, the world, because of economic development, there's a lot of demand. We fish everything and it became overfished. And now sustainable fishing is telling people not to fish female and juvenile, right? So this is a value. You don't shoot yourself in the foot. So ESG to me and JI Capital, we see it as a tool to transform companies that are fast growing and impactful to become very sustainable companies, sustainable businesses. And I mentioned my children, they tell me rather than I tell them, because they paste a big piece of paper at the fridge. Every time they flush the toilet, they make a tick. And they want me to do the same, to monitor how much water we used. When we bought chicken rice from the market, she said, please don't use this styrofoam packaging, bring your own box, right? So I see that it's coming back, right? The value of my grandfather is now coming back from my children. Hope I answer your question.
You did. Certainly, there's a lot we can learn from the young ones, for sure. So there is hope for humanity. Switching gears a little bit, profit and impact at scale. Is this fact or fiction? Over to you, Dave.
I think there's lots of good examples of how this is true and is starting to become more true over time. There's lots of good positive examples for areas of financial inclusion, education, really reaching out to the masses, access to affordable healthcare. So I think we're starting to see innovations that are really targeting to have impact, and they're able to scale up over time because of the intentionality that the entrepreneurs, the inventors are having in trying to solve problems that and provide solutions for, provide jobs for people or increased incomes for people that are at lower income or aspiring levels.
Thank you, Dave. So, question for you, Dr. Felix. So, can you help our budding impact investors? Give them some tips. What are the top 3 things to look out for an impactful investment?
Yeah, thanks. So I mean, for me personally, in the impact investment space for FinTech, or broader startup space, I would say top 3 things is probably first thing would be an impactful business model. I think that alludes to what was Dave was also mentioning just right before. And then second, the mindset of founders and management. And thirdly, the focus on business sustainability with a credible path to profitability. So if I walk you to these top 3, so what do I mean by impactful business model? For us as a development finance institution, it's important to help foster the financial services sector holistically, and thereby increasing financial inclusion and the efficiency and reach of the sector as a whole and along the whole value chain of financial services. So from a business model perspective, really like models that either have a strong financial inclusion aspects to it or cater to market segments that are currently underserved, such as SME credit, or provide even critical financial services infrastructure in the form of software solutions. And I mean, we have seen quite a few examples when we just saw the great founders. I think Asia Collect Flow, as it's now called, which is one of our portfolio companies, is a good example of providing financial infrastructure in the area of ethical debt collection. Regarding the mindset of founders and management, obviously an impactful model alone won't help you if you do not have leaders that make use of that potential and create like a culture around them that supports the unfolding of that potential. And we as investors understand that young companies that start out need to focus on a lot of different things simultaneously, and oftentimes there's just limited capacity to reinforce the impact aspects of their business. However, the companies should really be receptive to the impact aspects and incredibly want to drive them in the future, as they will have more resources available and get support from impact investors like us. So to put it differently, if we get the impression that we are forcing something onto the company, which they agree to, let's say for the benefit of receiving the investment, I don't think this would be like a proper starting point for a long-term investment relationship. So as an example for that, in the FinTech world, for us, it's extremely important that the FinTechs offer their services in a responsible and financially educative way, especially for B2C models that target retail customers. And in that context, DG, we co-develop guidelines for investing in responsible digital finance. And these are guideposts around things like fair and transparent pricing, data privacy, and so on. And we don't expect our portfolio companies to have them perfectioned at the time we invest, but certainly we like to work with the founders and to have their commitment to a common goal in that sense. And the third point I was mentioning is about the business sustainability with a credible path to profitability. I mean, this should really be a no-brainer generally for businesses, but oftentimes in the case of startups, where you see this kind of growth at all costs approaches with endless cash burn. And what we like to see there is a credible path to profitability over our investment horizon to really demonstrate the sustainability and long-term impact of the companies.
Dave, can you share your 3 tips for identifying companies?
I'm going to share one and give an example. I think one of the key things that we look for, and I think you want to look for as an impact investor, is unit economics. So let me give you an example. If you want to deliver, let's say, impact on a healthcare service, the cost of delivery needs to fit into the payers, whoever's paying, whether it's, let's say, the healthcare provider, the individual, or even the government, has to fit into their budget. So for instance, we've invested in a company in India that has created a breakthrough handheld device for breast cancer screening. The cost of a scan, so to scan one woman to detect potential breast cancer, costs about 60 rupees, so about $1. This means that a government of India primary healthcare center can afford to screen every woman, paying the company, let's say, 200 rupees or $3. So they can make a profit still at a very low price point, which the government is willing to pay in India. And they can sell that same product, that same breast cancer screening product, to a private hospital that serves higher income people. And they could charge, let's say, 1,000 rupees or $15 a scan. So maybe the cost is $1, the government gets charged $3, and a private provider gets charged $15. But remember, the private provider at $15 level is a much smaller audience than the masses that the government's reaching. So if the cost of the scan was $10 rather than $1, they would not be able to reach the masses, because the cost, the most the government's willing to pay in this case was $3 per scan. And this company has to be able to do it on a profitable basis. So you can price discriminate, or you can market segment to have your product or your service serve different levels of income levels. That's great. And that's often a good way to build your business. But it's critical, if you want to truly have impact, in this case on women getting screened for breast cancer, it's got to be, the product has to be able to deliver at a price point that can be affordable by the payer. So I think that's just an example of one concrete way that you would evaluate, let's say, in this case, a healthcare investment.
Thank you, Dave. So shifting back to Singapore, and on that topic, I asked about how to identify impactful investments. Ben, how would you go about ensuring that the companies that you have identified as an impactful investment is not really impact washing?
Yeah, that's a great question. You know, there's a lot of concern with greenwashing, impact washing, and I think it's come out clearly in a lot of recent surveys of impact investors globally. So it's live. This is a real issue. And, you know, being new to the space, right, we constantly ask ourselves, and we constantly refer to the experts in our network, for example, Capria and you know, some of our other friends, to give us their insights, their experience, and share with us how they view these companies and these models. But I think for us, what we do is, you know, the ability to make the connection between the impact and the model has to be very, very clear. So as the model will scale, the impact has to scale. So that's really important for us. Also, I would put it down, and you know, this is also a group of companies that we see quite frequently. These companies want to be impactful. They don't really know how. They've started to take steps. Their documentation isn't perfect. They haven't been able to communicate their ideas perfectly. And Felix, to what you said, right, that impact, it doesn't look great at the outset. And that's something that we've had to be willing to work with these companies to build their impact processes, documentations, policies, to really hone into what it is that they are trying to do. So we don't step back and say, well, that's not good enough. We actually get into the weeds with them, and we help them build out their impact model a little bit better.
Sounds like a very robust process that would flush out a lot of the impact washes. Melissa, any tips?
I think the way we look at it is really a synthesis of what Dave just shared in the example, and also what Ben has just articulated. Essentially, if you use back your 3 factors analysis, you look at what is the change that can create from the capital you invest in. So if your capital is going to invest into the business where the actual change is very small in terms of creating a change in quality of life or to the environment in terms of, say, carbon footprint reduction, it's very small, but there is something else on the side that is bringing all the profit, then that will raise a lot of questions. The second question you need to ask after what is the change would be, is that going to be organic growth, that naturally this is something that you can scale, or are you using the capital that you raise to acquire many, many companies and consolidate and create a platform and say, hey, now I have 1 million patients or 1 million people, but there is no change, right? The third one really is, can you measure it? There are so many things that can create impact. It's great, but as a fund manager that invests money as an impact investor, we have the obligation to make sure that we can measure that impact. So we look for proof of the impact. Is it scalable? How can we maximize the outcome with our capital? So measurable, can we measure that? And the integrity of the measuring process. I think this is all part and parcel of impact investment.
Thank you. I'm reminded that we have about 9 minutes left, but I'm going to switch over to our audience who've been firing away with questions. And Lurian De Mello, hello, my old friend. His question is, perhaps blockchain needs a great role in food traceability. Any venture debt in this space? Ben.
I think we're all proponents of traceability, and I don't know enough about blockchain, I confess, but there is one area in which we talk about impact being in terms of food traceability. We've seen a company, for example, in TannyHub, it's a portfolio company of ours, and what they do is they cut out the middleman, they put food on the table, and they enrich the lives of farmers, they reduce poverty for these farmers, increase access to the market. It's a really wonderful model, and in the process, the traceability of the food and the product is something that's very important, I think, to the end users today.
Can I share one example? I mean, I don't want to mention names or which country, but it is a true story. Like, we are in the midst of pandemic and COVID-19. At one point, everybody is trying to look for masks, right? We were short of masks at one stage. And my friends in Europe, they have a horror story. They have been importing masks. And later on, someone went to trace the source of masks, and this mask were actually manufactured out of slave camp in some big countries in Asia. So that would be something, that you really want traceability. Yeah, on one hand, yes, the mask is causing, prevention from infection, but where does it come from?
I mean, that certainly presents a big moral hazard, moral dilemma. Right now, moving on to the most exciting last part, is everyone needs to pull out their crystal ball now. What can we expect from this space in 5 years' time? I'll go to the furthest place, Seattle. Dave.
So I think one potential path for Southeast Asia is to fast follow India. So I would say that India is probably the place right now where the most intentional impact investing is going on. And it's just further ahead. They've been doing it longer. There's more investors doing it. There's more history there, et cetera. And I think that could be the future. I think we talked to a lot of fund managers and investors in India, and almost all, if you talk to them when I started this like 15 years ago, very few of them, most of them, they were focused on building businesses for the top few percent of people in India, basically the global middle class, the top 50 to 100 million people, because those are the ones that had disposable income, or that's what's perception at least. Microfinance really broke the mold there. It really spread out. It was the first kind of expansion into the masses in India. If you talk to fund managers in India today, almost all of them say that they're trying to serve the rising or the aspiring lower middle class folks in India, the 300-400 million people there, and many of them are investing out. Not all of them, but increasing numbers. I'm starting to see that more just starting to happen, maybe where India was 5 years ago, starting to happen in Southeast Asia. So I think that's one path that could happen. I think the difference is I think that there's some people in Southeast Asia that have maybe, let's say, unintentionally created impact. And that's not bad either. It's accidental or it's unintentional. But I think that the impact that is driven more from an impact thesis and from intentionality is probably going to end up having more impact over time, because the customer and the benefit to the customer is really going to scale, because you're focused on delivering value to a customer, and this customer is at a point where they weren't previously served. So it's basically serving underserved markets. And that's actually a good thing to invest in.
Thank you, Dave. Dr. Felix.
Thanks. Yeah, perhaps to the last point Dave was mentioning, I mean, what we see from the impact for business model perspective, I think we see more and more that the models in the FinTech tech startup world kind of interconnect different aspects of impact. So what I mean by that is in the more recent past, we have seen this kind of more linear models where, for example, you have a pure play FinTech play that caters to financial inclusion with providing credit to underbanked customers, or InsurTech that does the same with insurance. And then let's say you have an e-commerce marketplace or logistic marketplace that allows smaller merchants to sell their goods, cut out the middleman, digitize operations, and thereby reaching a wider market. And what we are now seeing is that these are getting already be interconnected, and I think this will increase much more over time, in the sense that this is all integrated in one solution or platform, where all these things kind of happen in parallel or simultaneously with even greater impact potential if steered correctly. So for example, that online selling activities of a merchant are integrated real time with working capital financing that allows that small merchant to stock up better and increase sales. And this can also be integrated with insurance solutions linked to purchases or transportation of the goods and so on. So I think there's a lot of exciting stuff to come in the next years.
I hope you're right, Dr. Felix. Melissa, what can we expect in the next 5 years?
Well, I think we set some kind of expectations. If 5 years from today, and we are still talking about, we need to solve problem of poverty, then impact investing that want to address poverty has probably not been working, right? That is one. So probably I hope to see a shift from more impact investing into more sustainability over the next 5 years. Then that would mean the region is evolving and developing and making progress. So it's about sustaining what we have rather than we still need to solve the problem of poverty or emission issue. Hopefully we get to that. But I think one, as a fund manager, I cannot run away from there, is that when I work with investors from all over the world, and I find that, investors in United States, in Europe, when you talk to them about impact investing, they have done that a lot already, and because of tax reason, whatever reason, but they always want to invest in impact that matter to them. In the midst of pandemic, many European investors told me they changed their strategy to focus on Europe only because the impact has to be positive to Europe. But Asia investor is very interesting. Asia is really probably the place that has the fastest pace of capital formation, right? There's a lot of wealth being unlocked. But many Asian investors, decision maker, asset allocator, when it comes to impact, they want to invest outside Asia. This is something that I find mind-boggling. So I hope in 5 years, we have a stronger ecosystem, not just general partners and entrepreneurs who want to create businesses, investment program that create positive outcome for society and sustainability, but also asset allocator investors sitting there saying, yeah, I want to, I'm making my money here, but I also want to make sure I give back and do it in a good way and treat people decently. I think that is really what I hope for, rather than I think it will happen, but I hope.
So,
Thank
so
you.
come for the returns and stay for the impact. Really, that's what we're trying to say as to allocators. Look, I agree, and I think one of the things I'd like to see in Southeast Asia, which I think will really start to put a spotlight on impact investing sustainably, is our returns. And I think we've already seen a couple of really good examples of impactful companies that can deliver some strong returns and be very impactful at the same time. I think if we can continue to show the market and in the investment community as well, that you can have a double line approach to impact and returns, I think that's going to make a really big difference to how investors, family offices, individuals perceive impactful investments moving forward.
Well, we've come to the end of this panel session. Thank you, my dear panelists, for joining and for your insights, and our audience as well for joining us, for being part of this. And I hope today you have a better sense of what impact investing, ESG, is. If you do not know, you can reach out to Genesis. We'll direct you to Dave, Dr. Felix, Melissa, and Ben. Thank you all.